Thinking about future results, please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Why the floral pattern shirt today? Because it's the first day of spring. Boom! Isn't that nice? I look out the window. Do you know the Monet painting of the British Parliament buildings? And it's all foggy and misty. That's what it looks like outside. We had tornadoes and the most amazing electrical storm last night, like lightning every 1 second for hours. It looked like 4th of July at night. First day of spring. Yoo-hoo! Yeah. So Matt and Ron, great thunderstorm, huh? Yeah. So hope everyone's holding out. Crazy for loving you. Hey, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. I appreciate you. I am charged with the duty of helping you become a success. I teach you technical and fundamental analysis. We cover trader psychology and all the things you need to become a success. You still have to put in the blood, sweat, and tears for years, but I will at least help you avoid all the common mistakes and get you past amateur, get you to survive, and then help you thrive. We do these sessions Monday through Friday here at Forex.Today. Please visit TradersWay.com and open an account. Give us an opportunity to earn your loyalty and respect. How do we do that? First of all, we don't monkey around with you or your account. You'd think that's a minimum standard, but it's a unique thing in this world. So that's really good. Fast execution speeds. You click the button, the trade goes in. Whoa! Much faster than average. Way faster than average. All those big boys, we're faster than that. How about competitive pricing, world-class customer service, all those wonderful things. So visit TradersWay.com today. Life is great, life is grand, life is good. All right, so good to see you. One of the things I want to start with is Trade the News. It's just it's a platform I've been using forever. And we don't need him. What I want to go through is some of the news. Now, today is the first day of the FOMC meeting, which you probably know of. That's cool. The announcement's not until tomorrow, but Jerome Powell is in charge of this meeting for the first time. That's kind of interesting, right? We'll see how that leads. Slight miss on UK CPI going into Thursday's Bank of England meeting. RBA meeting minutes reiterated low rates were playing a part in lowering unemployment and lifting inflation. Reiterated stance that nice English. The steady monetary policy would be consistent with sustainable growth in the economy and blah, 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 blah. So you might want to read through that and say, are they going to raise interest rates? If they do, how much, how fast? If not, when? South African CPI, 4%. Good job, South Africa. Boom. How does that feel? Every 12 years, prices double. Nice. UK CPI, in contrast, 2.5. Quite a difference, huh? blah 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 blah. All right, good enough. Cardi says it's temporary. Everything's temporary, right? All right, so let's just kind of pick up where we left off. Here's that move I missed on the pound. I want to start here, right? Just to show you that nobody's perfect. You can't catch them all. I bought this here. Oh, come on, you stupid drawing tool. Okay. I bought this here. In fact, it must have been a little higher than this. I bought it about here. Got knocked out for a loss here. Okay. Hit the target Monday. Boom, boom, boom. All one and done, right? And then I was sitting here, I think it was yesterday, and I noticed it dropped to 50. I guess it's 148.50. That's where I should have bought it, but I was busy at the moment. So I didn't see it until, I think it was like 83 or 90. I think it was more like 90. So it was way up here, and it was in this candle here. And I hummed and hoed and hoed and hummed. What am I going to do? Should I buy it high? I didn't have the time to nurse this and babysit this on a 1 minute, 5 minute, 15-minute chart and all that kind of stuff. And you know, the logic here is the up, the down, and then maybe the re-up, right? But so I was in here, but I'd missed the sweet spot. So you have to ask yourself in that situation, do you buy it and all that kind of stuff? And the filter that I use is, am I still that aggressive? Am I so aggressive that I'm going to wait for the 50% pullback and then buy it 40 pips late? Well, sometimes on pound yen, sure, 40 pips is nothing, right? But then I realized, you know, the top of this was the logical target, and that I shouldn't really expect any more than that. I mean, it may go up, but that's not the point. It's what you can get, right? So it's more like, I should have bought it down here at 50. If I'd been paying attention, that would have been the buy. But it's not the same at 90 because this is just a higher level of risk. So I'm not saying it was the right move. I'm just telling you what went through my mind. So I didn't trade it. I threw away the second chance. Okay. So generally, I sort of, I'm not going to say poorly played. I'm going to say overly aggressive. One of my problems is I was long like way up here. Okay. So if I had, let's say, bought down in here, I would have survived. You know, it's just sort of overly aggressive. Should have been a little more patient. Didn't quite have the time to do it, and all that kind of stuff. And but the thing is, I never once, for a second, thought of selling it. I suppose that's good, right? So the general plan would have been here. This is the target. So it's basically done. Okay. But all of that went through my mind again yesterday. I had to look at it and plan it out and all that kind of stuff. Okay. Look at that USD yen. Okay. It's not playing the monthly pivots very well at the moment. Okay. We do have weekly in here. And we do have this. So you know, as a bull, you'd be looking to buy M2, and you'd want to buy price action support, right? So here we got the price action support, and here is the M2. So if you were a bull on this, you had a buy, and we're only even now approaching a sell. If you happen to be a bear, but it doesn't look like a good sell because you don't have the price action, right? I mean, where's the price action going to be? It's going to be more like this, right? And that's kind of where we are now, just barely. So now you'd have to really drop into a 15 and say if it rolls over around 106.50, you have the opportunity to consider a short, but you have to be a bear. You know, and once again, what I'm trying to coach you on is if you're a bear now or thinking about being a bear now, were you a bear an hour ago? Were you a bear a day ago? Were you a bear a week ago? Like what turned you? Right? You're like, oh well, Lane, I just don't have a bias. I just every day is brand new day. Every hour is a brand new hour. Well, good luck with that. Right? All right, moving right. Aussie dollar, Aussie, Aussie. All right, so let's put this together. La la la, la 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 la. So I bought it. You can see my entry here. La 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 la. I bought it here, just above this pivot point. It's not beautiful yet by any standard, is it? So I won't feel really comfortable on this until really we got to get above this cluster. I mean, think about it. A bear is going to sell it there, right? Weekly, central, monthly, some sort of monthly pivot. There's a pivot cluster here, right? So can I just say bears are going to sell there? Okay. So the outcome could be a drop all the way back to here and have it launch up there. This is where if you had a team of traders, this gets interesting because you'd have somebody trying to buy the swing, jamming their stop at break even along the way. And then you'd have someone else that was either short long term over here or is going to get re-short long term over here. But you can pick up pips as a bull here. Let's say it stays down. Let's say 1 month from now we're lower than we are now. Okay, let's just say the downward action happens again. But you know, you could pick up a couple hundred pips this way, right? But it's hard for an individual trader to be long-term short but short-term long, and then get long-term short again, because you got to like analyze this and where do you buy that, but you're already shorted, so are you probably more managing the risk on the down one than trying to get in against it. And then up in here, same thing. You're more worried about managing the risk on the up and managing the risk on the down too, and then take a new one down while you're still managing the risk up. It gets very difficult. What happens is you get very mediocre at both. So it's better just to have a team, right? So you can make 300 pips on the way down, but you also make 100 pips on the way up, and you're precise on both entries and risk management. Okay. So anyways, you know, we got a long ways to go on this if it's going to work out. And there's no certainty on this at all. Okay. We're just barely climbing into this. But the target, if I may, the target is 84.5, and I'm long at 81.5 or whatever. 300 up. That just gets us back to this resistance, right? One of the things I'm cognitive of is that this can do this, this first. Okay? Okay? Yeah, so do you guys know like what I mean by long-term short but short-term long? That's where on a daily chart or a 4-hour chart, maybe you're doing a swing sell position and you got to stop at break even and you're trying to let it fall, 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 fall. Not for hours, but weeks, let's say. Okay? But let's say even though it's falling for the next couple of weeks, well, what if today it rallies? Just on the short term, not the long term, right? So, like in economics, we study two things: productivity on the short term, right? And we study productivity on the long term, and that's Y bar. So, if you have a graph, let's say a chart, you say, well, this is potential GDP, okay? So, for example, on the long run, what happens if demand for something falls? What happens to its price? Price down. And if it gets too cheap, what happens? If it's a great deal, demand picks back up and price goes back to equilibrium, which means let's draw it this way, just as an example, right? If prices are too high, right, then demand falls. If prices get too low, demand picks up, and then prices get too high again. These are called business cycles, right? And the red might be Y, actual productivity. Prices are too high, productivity falls. Prices get low, demand picks up. This could be the unemployment rate, the economy's overheated, profitability falls at corporations, and demand starts falling for their products and services. So they start laying off a whole bunch of workers, right? Central bank responds with easy money and, whatever. These are business cycles. So there's Y and Y bar. So I'm thinking like when it comes to trading strategies, the long term might be down, let's say, and you might be short somewhere here in the head and shoulders area, right? So you're short all in here. But what if you thought for the next couple of days it was going to be up? Do you just ignore it? Well, you can. The idea is to be on the short run on Y, be long up into here, and then Y bar, which would be long-term productivity, or long-term is what I'm trying to say. You may re-short here, or at least stop buying, right? Take your profit and run. Okay. So when you're an advanced trader, and I'm not saying this is something you even want to do, but when you're an advanced trader, you could be long-term short for short-term long, or long-term long but short-term short. But I bet you if you really studied the data, very few people are good at that. It's just time consuming. One day you'll just get so rich and so fat and so old, and you start wearing like flowery shirts and stuff, and all of a sudden you're like, I don't have time for this crap. I'm just gonna like stay in the long run trend, let the trend do all the work for me, right? Whoa, Barry. Yeah. Yeah, Barry, it was you, right, that emailed me last night? Yeah, yeah. I don't think it was. Barry sends me an email and he's like, "Hey, man, this mock fund thing that you're setting up. Hey, is this just a thing to earn a bunch of IB commissions up from Traders Way?" And I'm like, "I'm not an IB at Traders Way. I don't give a damn if you trade a lot, a little, or none. I just want you to succeed." Right? So it was a good point. And Barry's fairly new to the family, I think, right? So probably has met a few scumbags along the way. I hope I'm not a scumbag. I don't think I am. So, anyways, no, Barry. I just want you to become a successful Forex trader. And imagine Barry, imagine you and 5 or 6 or 7 or other 8 traders that I find happen to be awesome traders and work well as a team. Maybe I raise a bunch of money and we have a fund now because you're really, really good. That would make 100 billion times more money than being an IB, right? So that's not the point, man. That's not the point. Well, there are plenty of scumbags out there, right? So anyways, so it's a good point, valid point, Barry, but not the point. So right on, huh? Boom. Roy, beep, beep. All right, let's go into here. This is CAD, right? Wait, so how many pips am I up now? It's not a lot. All right, so this one is stacked a little better. Okay, this is last week's pivot profit zone on the weekly. That gives me permission to think up, right? Because what? This is where bears are supposed to take some profit, right? So that's what I'm thinking Friday. And also on Friday, this is a monthly pivot. Now, the CAD's been torn apart lately, huh? Right? Like, there's been nothing good about the Canadian dollar lately. So I bought it right here. I'll highlight that in red. Why? Well, like I just said, the bears were supposed to take profit last week here, and there's not price action support, but market support in the form of a monthly pivot. And then on top of that, the weekly swing pivot. I guess I got to do this in black now. Weekly swing pivot is right here. So I got a triple layer, the trifecta, the steak, shrimp, and lobster burrito. I don't know what to call it. Support, bro. So I bought it, and we're making money. Now the thing is, I'm not in love with this. I just kind of did what I was supposed to do. Like, imagine this. What were we supposed to do here? What does the swing trading course teach you? If you've taken the FX Bootcamp swing trading course, right? I mean, that is so obviously straightforward. It's dumb, right? How many people would agree with that? Like, just based out of what you're taught, textbook stuff, can't get any more basic than that, right? Right? Like, if you know what that is, you don't know how to swing trade. It's just like, wow. It's like somebody saying, what's that thing in your driveway? You're like, that's a car. Wow, what does a car do? Oh, well, it's kind of like a horseless carriage, right? You get in it and you drive around and it, like, really? You've never seen a car before? It's kind of like that. Like, that's a swing trade. Really? You don't know what that is? You don't know how to swing trade? Oh, okay. Well, you would sell up there and you would target this whole green area, right? Right? I mean, that's it, right? That I'm like, look, that's a swing trade. So that's cool. So I don't know if it's going to go the other way, but it's sort of like just doing the job. So we'll see. I always think that it takes more than one touch to sort of steer the ship around. Like I'm not a fan of V-shaped reversals, right? So that's why, like, this to me is pretty obvious. Why couldn't we get something like this now, right? So just because I'm long and strong and profitable doesn't mean it's a good trade. This could easily come up to this whole zone, and if you're a bear, you're going to sell this. Why not? This is your sell zone. Okay, right? So bears are getting ready to sell. So bulls, maybe you should manage your risk and pray. Okay? Man, I wish I made that 200 pips on the pound yen instead of losing 50, right? Like, gee whiz, instead of losing 50, I wish I had made the 200. Yeah, I wish I had made that 200. So anyways, bummed out about that, right? And then Kiwi. Kiwi's the laggard. Bloody laggard. What do we say about this guy? Well, we have to preface everything, not just this pair, but correct me if I'm wrong, but I think we highlighted 5 pairs while we were down here 3 weeks ago. And at that point, we said, look for it to go up into this area. And it really was. It was just between this line and the next one. And once it got up there, it was probably going to come down and double bottom. And I drew little sideways lines and stuff, right? Remember the red horizontal line just going to the right into nowhere? And then from there, maybe, just maybe, we get longs, right? Isn't that just the longer term plan, the Y-bar plan, so to speak? Was it 6 pairs? My apology, but thank you to me. And if we get so lucky, if we are blessed on these, because so far that was a pretty hardcore move since this was down for a month and a half. So to say it's going to turn and go up, and then to say a week or so later it's going to turn and come all the way around, and then turn and go back up again, I mean, that's pretty blessed. I think we should feel blessed. So if we're even blessed, what do we do now? Like, what's the target? If this stays profitable and we follow this price action up and eventually we make a higher high, and this goes into April because, you know, by the time we get up here, it's going to be April 1st and all that. If this, what is the target then? And not just Kiwi yen, like all the yens. I need correlation. I need this to be a yen move. The answer is not M4. Because by the time we get there, M4 will change. Remember, on the 1st, that'll change. And you're thinking maybe the week, but I'm not saying this is necessarily a weekly, right? Does this double bottom exist on a daily chart as well as a 4-hour chart, as well as a 1-hour chart? The answer is yes, yes, and yes. So the thing is, if somebody saw this on a daily, they don't give 2 hoots about your weekly. I mean, look, it's Tuesday already, right? They're not looking weekly. They're not even looking monthly, because by the time you get up here, it's going to be near maybe April 1st, and then we get new monthly pivots, right? They're not even thinking. They're not even thinking March. So if you rewind, all right, if you go back to March 1st, we said, look, even though it's been falling and falling and falling and falling, and there's nothing on this chart at all technically to suggest up, I think it's going to go up. Because that's where bulls would buy if they were bulls. But there's nothing on the chart. You wouldn't know that. You can't see it, but they're there. But it's not going to last forever. It'll go up a week or so, and then it's going to run into here. And then it's going to fall and come down and double bottom. The reason for it is we need to turn this whole thing around so it, turn a fundamental trend around is just not going to be quick. So you can expect things like reversal patterns, and that would be a double bottom, let's say. Okay. From that, now, if we can catch the double bottom, I'd like to hold it until the middle of June. Does that ring a bell now? Not this week, not the rest of March. Okay. So we'll see. I don't know. I don't know any more than you. Okay. Anthony, it's not an Aussie trade. It's not a pound trade. It's not a euro trade. It's not a dollar trade. It's not a CAD trade. It's a yen trade. Okay. So why, by the way, this big giant down move, I predicted this down move would start the first week of January. All the yen pairs were straight up like rocket ships. And I'm like, yeah. Good. Take all your profit, get the hell out, and then short the whole damn thing. The people are like, what? Yeah, short the whole damn thing. And it's going to fall until about April 1st. And then I like to buy it all back. Well, in this case, sell yen, but buy all those pairs back, right? Like, it's weird, right? Like, I am giving you weeks and months advance notice, right? We should be long all the yen pairs starting the third week of August, go all the way to Christmas, dump the whole position, ideally the first week of January, so you can avoid taxes. So even though you bought all the yen pairs, the first week of January, turn around, cash out of all those yen pairs, and then sell all the yen pairs. And do that all the way to April 1st. And then cash out, take profit on that, turn around, and buy them all back again. So we're at that point where maybe, just maybe. So we spent 3 months long the yen pairs, 4 months, well, now let's say 3 complete months, short the yen pairs, and now maybe the next 3 months will be long yen pairs again. Will it happen? Well, the other stuff happened, so I mean, you know, count your lucky stripes. Will the next thing happen? You know, I don't know. I don't know any more than you. I don't know. It's a plan. It's a hypothesis. This is what I'm teaching you. Come up with a hypothesis and then test it out. Where you make mistakes, where you find your mediocrity or inefficiency, is that you're skipping that whole hypothesis and you're just testing. Test. What are you testing? I'm testing if this is support. I'm testing if this is resistance. I'm testing, but there's no methodology behind it, and you're not going to have any consistency, right? So remember the book. You have to be confident to be a successful currency trader. How many people agree with that premise? Because that's just nonsense I made up and put into a book. But you don't have to agree. But I think, I wrote this down. I wrote down the characteristics I thought 20 years ago a successful Forex trader had, because I didn't have any mentors. I didn't know any currency traders. There were no retail Forex traders, right? So I'm like, well, what kind of person succeeds in this business? Someone who is confident. So I wrote that down. Confident. I have to be confident. Great. What's the next thing? And by the way, this is where it gets interpreted I'm an arrogant prick and stuff like that. Well, I identified a long time ago, I have to be confident. I have to. I have to err on the side of confidence. You have to do things like, good job, Wayne. That was a good entry. Good job, Wayne. That was a great exit. Because you have to stay strong. You have to. If you start to whimper, or if I say, when I talk about discipline, you have to be 100% disciplined, like throwing that pound yen trade away. I could have made 50 or 60 pips on that. But the point is, I'd rather be disciplined. Because if I start getting cracks in the armor, over time it becomes pure weakness. And you'll see it. Trust me. If you don't believe me, trust me, you'll see it. And you'll say, oh, how did I become the trader I've been trying to avoid? Well, discipline, right? So if I stay disciplined, I can stay confident, right? Well, where does the confidence come from? Control. Well, actually, no, I got it out of order, didn't I? The confidence comes from consistency. Okay, the consistency where you always trade double bottoms. You only buy at support. You only sell at resistance. You only sell at resistance with double tops. Whatever it is, it means you have a plan in mind. You have full control. It's not experience, Emilio. Think of golfing. You can golf 3 times a week for the next 10 years and not get significantly better as a golfer. Okay? Okay? So you have to have consistency, which means you have to have a plan. There's no way you can be consistent if you don't have a plan. You have to have a methodology. You have to have rules for engagement. You have to have the discipline to trade exactly that way or not trade at all, like I explained on the pound yen. Right? So if you're consistent, that means you have control. And that's where it starts. You have the control, and that's the discipline part. You're buying at support or you do nothing. You sell at resistance or you do nothing. You have it planned out or you do nothing. If it's a downtrend, you sell rallies at resistance or you do nothing. If it's an uptrend, you buy dips at support or you do nothing. But that is it. You are 100% disciplined. Always, every time, without fail. So you start with the control, that gets you consistency. Because the thing is, if you're always just trading double bottoms like this, let's say, and after doing that 100 times, and you've gone back and analyzed your ability to identify double bottoms, let's say, well, after a while, you'll start to identify them before they've even occurred, like I did here. And then you'll get better at entering them. Do you enter on a 15-minute, 5, 1 hour, what works better for you, and all this kind of stuff. And you analyze and you adjust and you improve and you perfect. That's where the consistency comes from, because then you know things like, well, if I catch this double bottom, there's a 72% chance I'm going to make, 72% chance you won't lose money. So let's say 72% of the time it moves up at a double bottom, you're able to at least move your stop to break even, and then you try to let it run. And 72% of the time you either break even or you make money. Right? And just that other small percentage, the double bottom fails, and you're working on improving that, right? But you're like, but you know that because you're consistent and you can measure it. Specific, measurable, attainable, realistic, timely, right? So you have a plan, you have the discipline to carry out. That leads to a consistency in your behavior, not the market, in your behavior. So now you can start measuring and perfecting that. And out of that comes the confidence, because you're like, 72% of the time, I'm going to put myself in an opportunity to win. I will take this every time. Right? Because 72% of the time, it works every time. That's how you get there, right? So I don't know what your hypothesis is. It doesn't matter. How do I come up with this nonsense mumbo jumbo? Doesn't matter. It's irrelevant. It doesn't matter. It's irrelevant. It's the other stuff that matters. Patience, discipline, do you have it? Do you plan your trades? Yes or no? Everything else is irrelevant. Oh, well, what about my ADX? What about my CCI? Should I use the CCI, Wayne? It doesn't matter, man. It doesn't matter. Sure, use the CCI. Yeah, it'd be great. It's not going to make you a better trader. It's a tool, sure. Okay? It's like asking a construction worker, what do you prefer, red hammers or blue hammers? The guy's like, I don't really care, man. Just pass me a hammer, right? I don't care what color it is. Yeah, the red ones are stronger. Yeah. Get me the one that has French and English instructions on how to use it. It is the hammer. You hit the nail on the head. I don't know what accent that is. I have no idea what accent that was. It was sort of French, Canadian, Hispanic sort of language. Was it a little bit French? So, you know. So anyways, yeah, we're just sort of climbing into it, but it's only Tuesday, right? It's not really a lot of pips yet. Cool. So let's just move on. But those are swing trades. You know, we're just doing our job on that. I got knocked out on that one too. I don't remember why or how. Probably again piss poor entry. It wasn't even Pepe Le Pew. Pepe Le Pew was cool. What I did was not cool. Wow, that collapsed on us, huh? You know what's funny about that? Oh my God. If I if I gave you a test, let's clear this out. In fact, let's just do it that way. I don't need that. Let's just redo this. Let's do the time we'll bring in. All right, if I handed this to you and I said, draw where bears are located. Tell me where the bears are. Okay. The first thing you probably do is say, right? That's resistance. That's support. And is that a sell pivot or a buy pivot? It's a sell. So that would be the first answer right off the bat, right? Where are the bears? And I suppose the second answer, you'd kind of have, maybe there's three areas. You'd have to do this one, and then I think you'd do this one, right? And that's it. There is nothing else. Where are the bulls? Well, you'd have to say, there's support there. There's something going on here. And the next one would be here. On just this chart. I mean, it's just that particular chart. You can change the time frame and get different answers, but okay. So I would just treat this, if I were me, I would just treat this all as a zone. And then you see the pivot in there? So what if it did this? Good enough, right? Don't you become paranoid in the end when you see where all the position is until you're like, how on earth can this? I think I know what you're saying, and I'll answer it this way. For the last 15 years of me coaching, I try to give you anchors so that you can remember all these sort of rules of, not even rules of thumb, but just, you learn how to behave or even think in certain scenarios. So I'll say things like support and resistance, for example. Let's say this area here. I say, if you see this as I just drew it, if you agree with that, I don't know if you do or not. Remember, it's all subjective. If you believe that's support, then support will hold 100% of the time. It will always, 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 without fail, ever break. It will always, always, always hold price back. Unless it breaks, right? And it gets you past this, like, well, it might break, it might not break. No, you're the one that makes the decision, right? So you say this will hold. If you're a bull, this support will hold. You will set it all up. You will plan it. You'll drop in smaller time frames, and you'll use technical analysis to discern, did it hit support, yes or no? And does your technical analysis tell you if it's going from bearish to bullish? And that's how you get into this. And if it does break to the downside, you'll lose a little bit of money. But your technical analysis tells you that your bullish trade plan failed. Okay? But if you think this is a zone to buy, so let's just say from this low to this low, okay? And then you throw down the pivot and you say, all right, this whole gray zone, ideally here, I'm going to look to buy. Okay? That's the plan. That's your strategy now. You think this is support. You think that's pivot, that all could really add up to something. So now you have your strategy done, right? You're thinking about buying this. I'm not saying it's the right decision. I'm just saying that's your strategy. Okay, well, you don't need to be on the 1 hour chart anymore. You already know that's your price. So now you need technical analysis. You want to use a 15-minute chart or a 5-minute chart. Okay? So you know your price and you know your zone. So on this time frame now, on the 5-minute, what if you saw something like this? Do you take the shot long? Okay. What if you take the shot long there and then it does this? You take a loss. Yeah. Well, you say it's a good trade. You don't know. It doesn't matter, but at least using technical analysis, you know when things are turning bullish again. But it's not that you get a 5A cross. It's not that you get a 2155 cross. It's not that you get a stochastics cross. It's not that you get any of this CCI, ADX, all of that. All of that is irrelevant. That's not what's going on here. Your MACD didn't make you buy it. So don't even say it. You're at support. That's what's relevant. And then you use all that other stuff, technical analysis, to discern, is it a good opportunity to buy, yes or no? And then if you do buy it, is it a good opportunity to get out because you're wrong? Does your technical analysis tell you you're wrong? Did you buy it at support and then it makes a lower low? Well, then you take a small loss. But that's what your technical analysis told you. That's why you should actually wait for a pattern here to avoid buying, because, you know, we just saw it. It's dropping like a ton of bricks, right? What kind of idiot buys something like that? So you better be cautious, risk averse, right? So if you were an ultra short bear, would you buy this? No, because you're an ultra short bear. Brady's like, not yet. No, you don't buy it, ever. So you're like, oh, this is going to get interesting. Yeah, of course it is, right? You're like, ooh, this is going to get interesting. I should probably move my stop and lock in some profit. Right? And if you're a bull, you know, like, oh, in here, I need to really pay attention. You need a double bottom 1, 2, 3, right? You mean like the one that happened here? Yeah, like that one. Okay? And my point earlier, and I'm not sure if I finished my point, this was a bullish buy, for sure, absolutely 100% a bullish buy on Monday. On Tuesday, this was for sure 100% obvious sell for a bear. So we don't even know what direction this is going. All I know is bulls did exactly what they're supposed to do, probably made money. Bears did exactly what they were supposed to do and probably made money. And what happened to everybody else? Their liquidity events. That is correct, Ted. Yeah. So like look at it from a product placement point of view, if you will. That's why a portfolio manager exists. So imagine, you know, I had a couple of dozen traders. We're trading around the world and everything's great. I bring in a millionaire client who owns a business that is does a lot of business in Europe. And they're worried about the value of the euro going down, so they need to hedge it. And I'll say, oh, well, I can custom make a portfolio for you. We can hedge you on the euro, right? So if the euro falls, you'll make money. Cool, I can build that for you. And I go, nope, 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 right? This product, right? And we can put it all together and say, well, there's a product, you can buy this. And if the euro goes down, you make money. And if the euro goes up, well, you're already making money because you hold cash. So you're long cash euros, and then you're short the foreign exchange market, and you're hedged. And the guy's like, that's brilliant. What about Swiss franc? Oh, you need Swiss franc? Yeah, I can build that for you. La, 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 la. Here we go. Custom design portfolio for you. Right? And he's like, well, I sell cuckoo clocks on the side. So, I'm worried that the Swiss franc will go up. And that'll make my cuckoo clocks more expensive or something. So I'm like, oh, all right, so you want to be long Swiss franc. All right, so we'll buy all the Swiss franc for you, right? And all that kind of stuff. So that's how a client thinks. That foreign exchange traders and hedge funds often are not just make a bunch of money really quickly. That's what amateurs think, right? Well, what if you already have a lot of money? That's where most hedge funds get involved, right? And so that's why someone with a lot of money doesn't want a lot of volatility, doesn't want a lot of risk, because God forbid, you lose a lot of their money, and then they're like, oh my God, I'm not rich anymore. So someone that's already rich just says, look, I need you to reduce my risk. I'm overexposed to euro. I'm overexposed to pound. What if Brexit kills me? You're worried about the pound falling? I can help your worries go away, sir. I can set you up in a pound ultra short fund. You can be short pound against the dollar, the yen, the Swiss franc, the euro, the Aussie, the Kiwi, and so on and so forth, right? And the guy's like, yeah, that's what I'm talking about. Short pound, and then take out the sort of the individual currency risk, and just say it's almost like creating a short pound indices, right? And the guy's like, perfect, that's exactly what I need. And I say, great, our minimum is 10 million. What do you think? Smell like a plan? But that's how, but that's how it works. Like, I have a few billionaire friends, and they, when they meet with the head of JP Morgan and stuff, then the head's team, a bunch of vice presidents come out and they all do presentations. Oh, here's what we think is going to happen to the euro over the next few months. Here's what we think is going to happen with the pound, and here's what we think is going to happen with the dollar. And then based on our analysis of your business, here's our strategy for you over the next few months, and all that kind of stuff. And they lay it all out. And, and it's truly like buying a product. Okay. For a wealthy or institutional investor, it's like buying a product. Like, I'm overexposed to the pound. Remove that risk. Okay, buy this. Good. Now that risk is removed. Next. Okay. So, anyways, going back to this, now would be your job. If you were a bull, you're not long now, but you're thinking about it, and now you're using technical analysis on a smaller time frame, maybe a 15-minute chart, maybe a 5-minute chart. Okay, but now you use technical analysis truly. Right? Because it's not hard to figure out that that's support, right? So now you're like, am I going to buy it? Different question. You know the price in which you're thinking about buying it, but when do you pull the trigger? Well, that's what the smaller time frames are for. Now you're going to sit here. And if you're a bear, you're thinking about maybe taking some profit off the table, maybe jamming your stop, maybe cutting your lot size in half, that kind of stuff. Booking the profit. What's wrong? If you were short 2 lots here, why not take 1 lot and then profit, put it in the bank, right? And then lock in 15, 20 pips profit on the second one. And as a bear, you'd be watching, well, what if it starts to look like it's double bottoming here? Then take profit on the second one. You don't have to be stubborn, just let it go. Do your job. If it double bottoms here, take your profit, right? We don't need hope. Hope's not a strategy, right? And a bull now is waiting for a turn. And do you buy the first 5A cross? Do you wait for a double bottom? How are you going to play this? Well, that's your alpha. It's not, right? That's your decision process. That's your ability to make decisions. The beta is the market. You're the alpha. You need to make a decision on what to do and when to do it. Okay? You got it? But I think the strategy should be fairly straightforward. You're either a buyer at these prices or you're not. Okay? Yeah. I kind of even think it's like almost done. Like a bull would have bought it on Monday, a bear would have sold it on Tuesday. I don't know what everyone else is doing. Like what else is there to do? I look at this and I'm a little dumbfounded. And there is some down on this, right? So I can see what the bears are doing, but I can see what the bulls are doing. The bulls did a great job. What a great buy that was. And I think they're really disappointed that they got above the monthly and then back below the monthly. But this is really nice. I mean, all of this is nice. Look at this. I mean, it's just gorgeous. So once again, a bear is probably thinking down here, don't you think? So a bear's probably not going to want to take profit, but they're probably also not going to add more. Okay? Hopium. That's pretty funny. So anyways, do you think a bear is going to add more to drive it down to the target? The only way I think that would happen is if you get like that, right? So I think a bull is going to have a chance. We don't know if it's fool's gold or not, but boy, it'd be interesting, something like that, right? Which one's right? I have no idea. Probably the down. And I only say that because we're making a series of lower highs. Yeah, no, and that's what I'm saying, Amelia. But then that means you shorted at 123.50, right? If you were bear, it doesn't really get easier than that. If, the next one, I mean, oops, let me go back to the blue part. So your plan on Monday would be to sell here, sell here, sell here. We knew that Sunday night. Okay. And that's what you got to get practice on. Having a bias, planning it out, saying I'm a bear, I'd sell it here, here, or here, so I'll wait until we get to those price levels. So down here, you're like, oh, well, I ain't going to sell it down there. And it retraces all the way up, and then you're like, aha, 123.50. That's my line in the sand. Oh my God. I wonder if I can get a trade. Boom, 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 boom. and you're just like, snap, boom. And all of a sudden you're telling your stuff like, I'm a currency trading god. Well, you don't want to be that confident, right? But like, think of it. How would you feel? You were a bear here. You were a bear here. Okay. So on Monday of this period here, you're like, I'm not going to sell it till it gets up here, and then you sell it, and son of a gun, you make money, right? And then the next week, you're like, oh, I'm at support. Well, I want to sell it sort of up in here. Boom, and you're like, boom again, snap. I'm the greatest, right? You're like Muhammad Ali, and you're like, watch this, bro. I'm not going to sell it down here. I want it to come up to here, and then I'm going to sell it. Watch this, bro. And then you sell it. Boom! And you're just like, just full of confidence, right? I know it's overconfident, but you know what I mean? Like, you feel good when you had the discipline and the patience to wait for your price. And then when you hit it, guess what? You do really well. When you hit it, look, you do really well. When you hit it, you do really well. But it's because you have the patience and discipline. And you're like, man, right? 72% of the time, it works every time. And you feel really, really good about what you do. So I hope you feel really good with what you do. So I will upload this ASAP. Thank you for being a client of tradersway.com. Thank you for posting your trade plans on Forex.Today. See you soon.